More Californians are turning to what's known as the plan of last resort after learning they've been dropped by their insurance company. The California FAIR Plan warns it could run out of money as more people turn to that state-chartered insurer. The president of the plan recently told lawmakers it too is facing ballooning costs from wildfires and other natural disasters, the same forces that have driven many insurance companies to leave California or stop issuing new policies. Let's get some more insight by turning to Carmen Balber from Consumer Watchdog. Thanks for being with us, Carmen.
Good morning.
State Farm just announced it will not be renewing some 72,000 California policies. It's less than 3% of State Farm's business in California, but it really put homeowners on notice. Whether or not we're with State Farm, what should all homeowners in California be doing now?
Well, the number one thing is to make sure that you're insured and your home will be protected if something happens. And so for State Farm homeowners in particular, they're now on notice that they need to start looking for another policy. The one good thing to know is that State Farm cannot just cancel you next week. Your policy will not non-renew until your policy renewal date. So for some homeowners who may have just signed up for their policy last month or just renewed, they'll have a full year to make those plans.
But let's say if my renewal is in April, I really could be down to the wire.
Absolutely. And so those homeowners should know that they should start looking for an insurance agent right away who can help them navigate that process. There are other home insurers selling in the market, but as you mentioned, there is the FAIR Plan, which is the insurance company of last resort. If Californians can find no other options, they can go there. But we caution people that the FAIR Plan is a bare bones, minimal coverage policy that's going to cost more. So try and do your best in the rest of the market first.
So let's talk about the FAIR Plan. It stands for Fair Access to Insurance Requirement. It's funded by the insurers that are doing business in our state, like you said, a fallback for those who can't find conventional policies they can afford. But even the FAIR Plan is suffering because it's carrying so many more policies. What's the solution here?
The solution here is to stop coddling the private insurance industry. It's clear that the insurance commissioners plan to give the insurance industry everything it's demanding, deregulation, in the hopes that they might deign to come back into the marketplace isn't working. What we need is a mandate that home insurers who want the privilege of selling home and auto insurance in California sell to every Californian who does the right thing and meets state mandated guidelines to protect their homes from wildfires. That will get policies out of the FAIR Plan and start giving Californians access to affordable, reasonable coverage again.
Is any state doing what you just described? Is any state getting it right?
No state is mandating that insurance companies sell to people who harden their homes against wildfire, but we have a precedent here in California, which is that every auto insurance company has to sell to good drivers, safe drivers. We also have a precedent in the health insurance market where health insurance companies can't refuse to sell to you based on a pre-existing condition. So there are precedents, and it's the only thing that's going to ensure home insurers come back into the marketplace.
California, of course, has seen more than its fair share of wildfires and other natural disasters. We are not the only state that suffers from Mother Nature. When you look at other states that do have unusually high numbers of these natural disasters, how do they handle the insurance aspect of it all?
Well, I think what's really different here in California is that the insurance industry is seeing an opportunity to get rid of what are the strongest in the nation insurance regulations that California has that have kept prices lower and insurance accessible for so many decades. So I would point to an example of what we don't want to do, which is Florida, which gave into all of the insurance industry's demands, yet their insurance rates are 2.5 times the price of Californians. Insurance companies are still leaving the market, and they have 5 times as many people in their insurance company of last resort. So what we really need to do is start holding the industry accountable. We do have other states that are moving towards requiring insurance companies recognize wildfire and other natural disaster mitigation, and we need to follow those footsteps.
If that plan goes through, should homeowners expect to see their policy prices go up or down?
We expect prices to start going down if insurance companies have to recognize that homeowners are doing the right thing and protecting their home from fires, which not only protects themselves, but it reduces the risk of fire harm in their community and saves the insurance companies money. So this is a win-win for everyone if we start doing the right thing.
Yeah, it's such a hard thing because let's say you get dropped by your insurance carrier. You can't just say, well, guess I'll get rid of the house, right? If Netflix is too expensive, we drop Netflix. You can't really do that with home insurance. All right, Carmen Balber from Consumer Watchdog, the beginning of a good conversation. We appreciate you joining us this morning.
Thanks for having me.
Of course. Still